Things are changing again in this week's local market update as we see new trends emerging that could indicate rocky roads ahead in the short term for buyers. That's coming up in today's Southwest Florida housing market update right now. Hey, thanks for joining me today. We're looking at potentially new emerging trends in this week's market update stats that could spell short-term trouble for buyers. But before we get into this week's stats, if you haven't already done so, please consider subscribing and hitting that bell so you don't miss out on the latest data, tips, and news helping you make better decisions when it comes to buying, selling, and investing in Southwest Florida real estate. So this week, I'm switching up the video format a bit, so those of you just looking for the stats get them quickly and efficiently, and those looking forward to my macro breakdown can return tomorrow for another video focusing on the news and my personal analysis of how it will be shaping the future housing market. Now, without further ado, let's dive into the local market stats. All right, so let's jump right into this week's local market stats. We're going to take, as we do every week, I'll divide this up into north and south parts of Southwest Florida. So we're going to start off with the southern part from Cape Coral down to Naples. As you can see from this, we are seeing a new trend emerge that the new listings are not coming on as strong as they have been over the last 2 months. So we had new listings this week go from 683 to 620. That's down 10%. Again, that was down last week as well. Solds went from 608 to 561. That is down 8%. So again, that is also good news. If we're seeing less listings come on, we're also seeing less sales close. That's good news as well. It means that we're kind of keeping homeostasis here. Pendings, that went up 1% from 783 to 792. Single family, so this is the inventory breakdown. Single families went from 4973 last week to 4980 this week. That's up 7. Last week we had a pretty negative number of, I believe, around 40. Condos this week, which is everything other than single family homes, went from 2127 to 2086. That's down 34. Last week we had a net loss of 47. This week we have a net loss of 34. So, even though 34 is a net loss, we've been seeing gains of over 200 for the last 2 months. So, we're really at all-time highs for new listings coming on the market, considering the season that we're in right now. We'll take a look at that breakdown in just another slide or two. But first, let's go on to the multifamilies. Last week, 174. This week, 180. Only up 6, but still around all-time highs for multifamilies actively listed. And then foreclosures, 45 to 43, that's down 2. So this is what I was talking about as far as when you're comparing the historical averages. This is year over year for Cape Coral, the Fort Myers area. Active inventory is up 91% from a year ago. So 4,584. This is for the month of July. That's up 91% from a year ago. That's a huge increase, obviously. New listings up 3.6% from a year ago. Again, summer, as in the summertime, you're usually seeing more listings come on because that's when people want to move before school starts, things like that. Also, pending inventory, that's down 15% from a year ago. So pending is what's going on in the market right now, and that's down 15%. Part of that does have to do with the fact that there are less listings on the market, but again, less people are actually putting in offers right now and getting offers accepted. Closed sales, that's also down 25%. Again, this is a lagging indicator, but that's well down. And then median time to contract. So this is the amount of days on average it takes for a home to actually get an offer that's accepted. That's up 11 days from a year ago. Again, we were down to 6 days in some areas, even down to 2 or 3 days in some neighborhoods. Now we're seeing that is up to 15 days. And then the average sale price is right around $500,000. That is up 19%, but that has been slowly starting to go down. Part of Southwest Florida, from Punta Gorda up to Sarasota, new listings went from 1617 last week to 1546 this week. That's down 5%. Not a huge loss, but still a loss nonetheless. And the bigger news here is last week we had price decreases were up 19% week over week. This week they're down 19% week over week, from 2839 to 2303. Solds, again, a lagging indicator, 1628 last week, 1593 this week. That's down 3%. So not a huge drop there either. And then as well, pendings still down 3% from last week. That's what's going on in the market right now. So buyers are still holding off. Um, we'll talk a little bit more about, another reason in a second, but that went from 2036 last week to 1973 this week. One of the big things that's going on with pendings right now, and I'll be covering that in one of the stories tomorrow, is that we're seeing less and less home sellers actually want to put their homes on the market. And I'll be going into a few of those reasons in tomorrow's economic breakdown. But for now, just know that less sellers are putting their homes on the market, as you've been seeing over the last 2 weeks, with new listings going down. Inventory breakdown for the northern part. Single families went from 4047 last week to 4048, just a gain of 1. Condos went from 1386 to 1377. That's down 11. So we went from a net loss of 49 last week to a net loss of just 10 this week. Multifamilies, there was no change week over week, and then foreclosures, a gain of 1. So ultimately for the northern part, really not any major changes as far as inventory. We're starting to reach a little bit of a balance here as far as new listings coming on and going off. So that's kind of the new trend we're seeing. Things are starting to level out a little bit. But again, if you look at any bell curve, you always see the curve goes way up. And then right at the top, it starts to actually level off, flatten out a little bit. And then you start to see things drop. And I do think I did have somebody comment last week about my predictions, as you may say, being incorrect. Again, please don't take these as predictions. I'm trying to give you the latest stats, the news, so you can make an informed decision. My predictions are solely my own opinions, and they really have to do with what I've been seeing over the long term. Again, housing moves very slow. It takes months, sometimes even years, for markets to really change. We've been in the bull market for 10 years, and now it's probably going to take a year or two for things to really head the other way drastically, but we are starting to see that shift. I think right now we're at that peak where we're starting to see the bell curve kind of flip the other way and head the other way, but that does come with some flattening and some balance for a short period of time. Moving on to the next slide, we're going to just look at the interest rates real quick. This is as of today. Interest rates did go up. So this is where I was talking about the short-term pain a little bit for buyers. Interest rates are heading back up. And after the chairs, the Fed talking about what's going to be happening, at least for the next month or two, they are going to continue raising rates. So that is having a little bit of an effect on the markets right now. And again, the interest rates really have to do with the 2 and 10-year bonds. So the 10-year bond and the 2-year bond both have gone up in the last couple of days, which is why we're seeing mortgage interest rates go up as well. I do think they are going to be going up again for the next probably month or so. I'm not sure how high they'll get, but until the Fed decides that we are starting to see inflation head the other way and the economy starts to slow, and ultimately what they're really looking to do is they're trying to actually cause really layoffs and job losses, because the market right now is too hot and it's kind of causing this spiral, this vicious circle where employees are getting paid more, which is forcing the companies to raise prices, which is getting passed on to the consumers, which the employees are the consumers, so they're paying more, and it's this vicious cycle. But when the Fed said that they do see inflation starting to cool down, they said they needed more than just 1 month's indication for them to actually reverse course. But they did kind of leave a little bit of optimism and hope there that they may reverse course, though the markets right now feel like it's way too early to decide that. So that's why we're starting to see the bond market head back higher. The dollar is getting stronger as well too. So we'll have to continue looking and keeping an eye out on what's going on in the bond market. But for those of you buyers who are on the sidelines, just know, like, in the short term, the interest rates are probably going to be heading up, and there's no guarantee that they will come down. My opinion is that they probably will, but again, who knows when that will happen, if it will happen. There's no guarantee on that. I don't have a crystal ball. Again, these are just what I'm seeing and kind of my takes for what's going on. Moving on, just to give you the historical data as far as the northern part of Southwest Florida, active listings for July, this next slide is June, but I want to compare this week, this month's July, 19% from June. So it's 19% month over month, and it's up 52% year over year. New listings, again, the big story here is month over month, that's down 8%. So we are seeing a bit of a slowdown in new listings coming on. Again, homeowners are not putting their houses on the market. We'll talk about that tomorrow more. Pending sales, just kind of overall, pending sales are down across the board, month over month, year over year. Same thing with listings sold, down month over month, year over year. Average days on market, that's increasing month over month. It is still down from a year ago, but it's up over month. And then the other one is average sales price. That is down 3% from 459 last month in June to 447. That's down 10,000. If you've been paying attention to any of the price decreases on the market, you've been seeing probably a lot of 10 to 15,000, which on average comes out right around this range here, around the 12,000 mark. So just to look at and compare kind of July, the stats where we were in July. This is the new kind of the gauge, the indicators. Active listings were above the 5-year average right now. That changed from last month. And then new listings were way up on new listings when compared to the 5-year average, which is around 18,000. We're up to 22. So that's 4,000-ish over. And then closed sales were well below closed sales. So for the 5-year average where we should be. So, this is kind of indicating what's really going on in the market right now. Things are definitely slowing down. And then when we look at what was last week, I'll just kind of go before them. Take a look at the active listings on the left here. We were in the yellow. We were right in around the range. When you look at this month, we're over the range. So we have a lot more new active listings coming on. Same thing when you look at July's new listings right now, they're skyrocketed. The same thing for last month. And then when we go back and we look at closed sales for July, that's all the way at the bottom. And then we were pretty much on the higher end compared to the 5-year average in June. So that's changed drastically as well. Thanks for watching this week's Southwest Florida Market Update. You can join me again tomorrow for this week's economic news update. And if you have got value out of today's video, please hit that like button or leave a comment to let me know. And if you'd like a more customized area housing report for a specific city, zip code, or community, you can become a subscriber on my site and get access to those reports and tons of exclusive tools, resources, guides, and more. I hope to see you tomorrow. And until then, stay positive, stay safe, and more importantly, stay free.